Joining us to talk more about the impact on the markets, which is probably most important to our viewers, Alec Young, Managing Director of Global Markets Research at FTSE Russell, and Halima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets. So this is not your first rodeo, is it, Alec?
Yeah, we took a look back at the impact of missile strikes on the market. And
so you did this already?
Yeah. People have already
crunched these
numbers,
question, yeah.
the spreadsheets there. I think the impact historically has been fleeting. I would say, though, that this guy was a key general, a key foreign operative for the Iranian regime. He helped them carry out their agenda in the Middle East. So I don't think we can dismiss this as completely a one-time event. I wouldn't be surprised if there was some ripple effect in the short to intermediate term, especially given how volatile the Iranians can be. So you don't want to be too dismissive of it, but certainly historically, these events have tend to be isolated events, and the market doesn't really view them as recurring. So the negative impact on stocks has historically been pretty fleeting to these types of things.
Halima, what if oil went to $100 after, if they really ramped this up and closed the straits, or who knows? But what if then suddenly we do worry about global growth and the impact on all markets, don't we?
I mean, if this were 5 years ago, oil would absolutely be above 100. I mean, we were above 100 5 years ago when you had ISIS on a tear in Iraq. Now with U.S. production, that has really blunted the impact on the market of geopolitics. But I do think we really do need to pay close attention to what the Iranian response will be. I mean, Qasem Soleimani was considered the most dangerous operative in the Middle East, not just in Iran. And so the question is, how does the Iranian leadership respond? I mean, they've done attacks on tankers since May, seized ships, and in September took half of Saudi's oil production offline temporarily. So they've demonstrated a capacity to be very disruptive. So I think we do need to pay attention to what comes next.
I mean, will they confine their reprisals or retaliations to economic things like oil, or do you think they'd actually try to cause casualties among our forces there? That is not a good idea, I don't think.
Well, I mean, there are 5,000 U.S. troops serving in very close proximity to these Iranian-backed militias. There has already been a partial drawdown of the U.S. embassy in Iraq. That happened in May because of concerns about risk to U.S. personnel. So that is something we need to be watching very closely. And President Trump has essentially enforced his red line on American life. So if we have more attacks on Americans, you can expect probably a very strong... I mean, after this, I don't think we can rule it out. And again, we had those incidents at the embassy over the weekend. I do not think anything is really off the table. And if we do get an Iranian response that involves the U.S., you can expect potentially a U.S. response on Iranian targets. So I just don't believe that this is over. I think Soleimani was too important to the Iranian leadership for them just to let this pass.
All right. Alex here, you just made a few trades. So did she talk you into dumping? No, you didn't, actually. But does that change your mind on the impact on the market?
One thing that's interesting is that everyone hates energy. It's universally underweight. Millennials are divesting. Everyone knows the bearish narrative. And I think this is a reminder that you can never get too complacent in your market positioning. So I think this puts a bid. There'll be a geopolitical premium that goes into the oil price. I think that puts a bid under a lot of the big oil companies. Great dividend yields there. Everyone's looking for income. So I think people are going to maybe take a slightly more positive, constructive view on energy, which is good. The other thing that I think is healthy about this, leaving aside the geopolitical side, the market had gotten way overbought. So we need to digest. Stocks do better in a 2 steps up, 1 step back dynamic than when they're going up every day. So whatever, it's unfortunate that it took something like this, but I'm glad to see some of the froth come out of the big momentum growth stories like the big tech stocks. They needed a breather, and I guess this is it.
What was your price target on January 1st of 2019?
If you're asking us, did we think the market was going to go up 30% last year? No, we didn't.
What do you think for 2020? And should we listen to you after you were wrong about last year? Or?
Yeah, I mean, I don't think anyone ever predicts a 30% up year.
What do you think this year?
I think this year the consensus is that the market goes up a little bit. Usually the consensus...
Will that be right?
Usually it's wrong.
That's what I mean.
So I think you want to probably bet on something else. It'd probably be up a lot or down a lot. Down a lot.
That's what I've been saying.
But usually the consensus, because it's based on information that's already priced in, you usually don't get that
for the unknown unknowns, which happened again yesterday.
That's what really matters is the stuff that nobody can predict.